Welcome to the Startup of the Year podcast, where each episode we showcase exciting new companies from around the world. This podcast is produced by Established, creators of the Startup of the Year program. Established is focused on helping organizations with their innovation, startup, and communication strategies.
Hello, everybody, and welcome back to the Startup of the Year podcast. I'm Frank Gruber, the co-CEO of Established. And on this episode, we're talking with David Aronson, the founder and CEO of Peanut Butter, a company that helps employers offer student loan assistance as a benefit. So in essence, they're helping employers get rid of employee debt from student loans, which is amazing, helping them with getting and achieving financial freedom faster. So pretty cool product. We met David a few years ago. He came through our Startup of the Year program and vetted down from thousands of companies down to the top 100 and participated in our 2016 Startup of the Year program. And so he came to our summit, he pitched there, he impressed a lot of people, he got into the top 5, pitched there and impressed more people, and has continued to just grow the company from there. So really excited to have David joining us today. And he's from Chicagoland as well. And so we're big Cubby fans. And oftentimes when I run into him, we could talk baseball for hours. So excited about that. And then obviously wanted to give you guys a little bit of backstory on David so you'd understand where he's coming from. He comes from 20 years of business experience. He founded 6 other ventures as an entrepreneur. And before that, he served as a senior director of business development at Sears Holdings and director of corporate development at Gevity HR. But he began his career helping run the family business, which was the family's tasty bakery, which sounds delicious. So excited to talk to David, and he'll be joining us in a minute. Before we jump into the interview, though, I wanted to share some updates from our team. We've been doing these segments where every week we want to share some updates, interesting commentary, and tips and tricks that could help you and your business along the way. So first up, we've got our VP of Programs, Lori Thiel, and she's got some thoughts about the 2020 events.
Hey everyone. None of us could have predicted that we'd be using the word pivot in 2020 as much as we have, and will likely continue to do so. On that note, I wanted to share my gratitude to all the startups that have applied thus far to Startup of the Year. I also want to take a moment and reflect back on the 4 fast track events that we produced as part of our pivot. These events allowed us to bring more opportunities, brand awareness, and put a spotlight on the startups that participated. It has been inspiring to see the resilience and determination from each of these entrepreneurs as they keep pushing forward. As our female founder winner from March told me, "Give us Red Bull and we will keep going." So our final stop for 2020 Startup of the Year will be the announcement of the top 100 and then on to our November summit. There is still time to apply by September 15th if you want to throw your hat in the ring, and we hope you will. Now back to you, Frank.
Thank you, Lori. Great stuff. Next up, we've got our Director of Strategic Operations and Managing Member of Established Ventures, John Guidos, and he's got some updates on how to perfect your pitch, so some pitch deck pointers.
Today, I wanted to talk to you about metrics. Some things to consider when making your pitch deck, and often the best recipe for early stage companies is by starting small and demonstrating how your service or product provides value and efficiencies over a small sample set. Then you extrapolate those numbers over a larger sample set and demonstrate that you've solved for scale. And as long as you are putting together a good team, you should be getting investors excited. Now, as I mentioned before, metrics are always important, specifically when raising capital and talking with potential investors. But an issue that is often overlooked by founders when making their pitch decks or in the early stages of their companies is evaluating their company's value right out of the gate. So when you're starting out and you're trying to raise capital, you have the luxury of saying your company is trying to obtain, let's say, a 10% market share of a $2 billion industry, and thus easily a $200 million valuation for your company. But then after a year's worth of sales, if you haven't hit your goals, you may end up having to raise a down round or even a bridge to keep your company going, thereby leveraging a lot of the ownership of your company. So I just want to caution all of you out there when you're including some of those metrics and valuations in your pitch deck to take some time and consider some of these things. And that's all I have today for the pitch deck pointers segment. Thank you all for listening. Hopefully you learned something. And now back to you, Frank.
Thank you, John. Thank you, Lori. Great stuff. Hopefully all your listeners out there are learning some things from our team, and these tips will continue because we want to really help add value here and help you with your journey. So we've got, I'm sure a lot of folks listening that have a new idea, or maybe they want to create a brand, or maybe you just even need to create a new brand shortener for what you're doing. But basically, all of those things include the idea of creating and locking up your domain. So you got to figure out what's your domain going to be for any of those things. And thanks to our partnership with .us, we're actually offering free .us domains by going to the link in our show notes. So all you need to go to is soty.link/.us plus, and you can go and register for, you got to sign into the registration platform, but you ultimately, once you fill out the paperwork, you more or less get a free domain. So pretty exciting stuff. Get that idea out there, that new brand launched, and you can go do it now on us. So now let's catch up with David Aronson. David is joining from Chicagoland. David, welcome.
Yeah, my pleasure, Frank. It's always good to talk with you, whether we're catching up on business or talking about our Cubbies.
Yeah, go Cubbies.
Cubbies. We at Peanut Butter help employers offer student loan assistance as a benefit. So that in turn helps companies to attract, retain, and engage college-educated workers.
Okay, great. And when did you start the company?
Company was founded in 2015.
2015. And how did you come up with this idea of helping college students with their debt?
Yeah, I had worked in HR outsourcing, and I always knew that the thing that employers buy, or the things that employers buy, are things that will help them get and keep the right people in place. And I was actually outside of HR outsourcing for a bit of my career when I came across some research that gave me an indication that benefits hadn't really kept up with the changing demographics of the workforce. I, like others, were struggling with student debt, and I thought, man, what if companies could help with student loans in the same way that they help with health insurance and retirement? Would that be meaningful to workers, and in turn, would it help those companies to land the job candidates that they want and to keep great, productive employees on board? That was the hunch. We later backed that up with research and have since proven that it's very effective for companies across industries.
That's great. And can you explain, just so the listeners understand, how does it work from a business model? Who actually ends up, I guess, paying for this or paying you guys to do this, just so people understand?
Yeah, like a lot of other benefits companies or benefit administrators, we're a SaaS provider. So the employer pays us for the use of our services. If you were to work for a company that offers peanut butter, you'd hear one of two things. You might hear, hey, we're going to help with your student loans by providing you with all of the resources you need to manage your student debt. And then you get an invitation to create a free and secure peanut butter account that provides you with a single place to organize your loans, a personalized action list that identifies money-saving tactics, a refinancing marketplace, debt counseling options, everything you need to take control of your loans. If you were to work at another employer, you might hear, hey, we're going to offer you all of the resources you need to manage your student loans, and we're going to contribute toward the repayment of your student debt. Enroll here with Peanut Butter, and you'll get $50 or $100 a month toward your loans, whatever the company has decided. So in those cases, the employees not only receive all of the tools digitally that they need to manage their student debt and reduce the cost of their loans, but the company also contributes toward the loans each month. We collect those contributions, send them directly to the loan servicer, and as a result, employees get out of debt much, much faster than they would on their own, and they often stay with their employer significantly longer, which for the employer leads to lower costs of talent acquisition, or lower costs of employee turnover, a better ability to acquire talent. There's also some interesting demographics around student debt holders. Today, unfortunately, women hold 2/3 of student debt. African Americans and Hispanics are twice as likely to hold student loans as their white peers. What that means for companies is that they can use this benefit to engage underrepresented groups in the workplace and in turn accelerate the positive impacts of both gender and cultural diversity. So it's, for the company, the reason that they choose to offer student loan assistance is often to attract talent faster, retain talent longer, improve diversity, or just generally to improve the culture. Anytime that an employee pays off their loans, it's with the company's help. It's a shared achievement, and a lot of companies want to promote a culture where they're creating shared achievements with their team members.
Yeah, that's fantastic. I love it. I think that more companies should do it. And I think that obviously it's freedom, right? It's financial freedom when the company's helping them do that. So I really love what you're doing. Now I have to ask, just because I'm a curious type, why peanut butter? There's so many nut butters out there that you could have named it. What was the kind of impetus for why you named it peanut butter versus almond butter or any of these other butters?
Peanut butter is the cheapest. It's
Oh,
the it's an homage to student loan holders. For a lot of people, peanut butter was the only thing that they could afford to eat when they were in college, and it wasn't just uh, getting up, going to school, learning their craft, but it was the sacrifices and the commitment that they had to earn their degree that in turn has qualified them for a great job with our client, their employer, and the name of our company is really it really speaks to what student debt holders have put in to get a great job with the company they're with today.
wow, I love that. That's a great, that's a great reason and a great explanation for a name. So a lot of times people just come up with a name, and that obviously you have a little bit of purpose and meaning behind it. And I love that. So, all right, let's talk a little bit more about your team and what you've been up to. You pitched at the 2016 Startup of the Year competition. You were a top 5 competitor. You did amazing. I wanted to just, since then, that was just when you were getting going. You were only a year old. What's happened? Where have we gone? Like, what?
Well, the Startup of the Year competition was impactful for us. At the competition, we announced 2 new partnerships. I felt really fortunate to connect with people who have become longtime friends at the competition, other founders like Ty and Courtney at Shearshare. And it was at the competition that in a very early stage we were able to have some further validation of our model. We were experiencing some good traction, but having the association of the Startup of the Year and the being up in the same air with organizations like Shearshare and being a finalist really helped us. It helped us to show that this was a real thing. We're a real company, and we in turn landed a number of new clients. Today we serve, now 4 years later, we serve employers across the United States and into Canada. Our solutions, our student loan assistance solutions, are recommended by names that employers know, like ADP, Aflac, and others. We work with companies in technology organizations like Instacart that provide student loan assistance to all of its shoppers. We work with big banks like Mechanics Bank, publicly traded companies, private equity-backed firms. We work with organizations large and small in tech, healthcare, professional services, financial services, and really owe a debt of gratitude to you and your crew for the boost that we were able to achieve through the Startup of the Year competition.
Oh, well, thank you so much. You did a fantastic job, and it was obviously it's always great to see companies like yours start there and you hear that, and then just like how far you've gone. Like you've got some amazing traction and partnerships, and actually you raised some funds too, right? Like you raised a little bit of funding there. Um,
Yep.
and so give us a little bit more about maybe the current, like what's on the roadmap for you guys? Like what's next? I mean, I remember it was about a couple of years ago you were raising funding. Where is that? How's that going? Is what's next from the product perspective? And maybe give some folks any any insights into that process.
Yeah, we've through um, organic growth and some venture backing, including funding from well-known angels like Howard Tullman, venture funds like Steve Case's Rise of the Rest seed fund. We've got sufficient capital. We have executed on our plans and continue to grow. Today, we find ourselves in an interesting place in the market. We've got an excellent team, folks like Justin Weber, who's our CTO, who was a longtime engineer and technical product manager with Groupon, have joined us, and we've got a tried and tested student loan assistance solution that works for the largest of employers, the smallest of employers, and companies across industries. And there's never been a greater need for it. In today's uncertain economy, companies are struggling to engage remote workers. Workers in all sectors are unsure of what the future will hold for them and their money. And how to make ends meet, especially when they deal with challenges of hundreds or thousands of dollars in monthly student debt payments. And the government, through the coronavirus pandemic, has helped. The CARES Act in March authorized a payment holiday for federal student loan borrowers who comprise about 90% of all student loan borrowers. And it said basically there'll be 0% interest, and you don't have to make any payments through September. And the president's executive order extended that through the end of December. However, that holiday ends at the end of this year. So what we're seeing now is a lot of companies coming to Peanut Butter and saying, hey, we don't want our borrowers to be, our employees, I should say, to be out in the cold when the reality of student debt hits again in January. And we need to get our student loan assistance program up and running. Some companies are using student loan resources to provide employees the resources they need to manage their student debt. And a lot of companies are saying, we want to help our team members by making usually modest $50 or $100 per month contributions toward employees' loans.
Great. And so I guess what I want to understand for any of the listeners out there too is what's the right time to get your program in place? Like what company size or what, I guess, revenue level or what's the right dynamic to kind of start using Peanut Butter to help your employees?
Yeah, I would say any company that employs college educated workers, it can see an advantage from offering student loan assistance. We offer pricing that makes it economical for companies of all sizes. It's unlike a lot of companies, we're very transparent with our pricing, so all that is available on our website. But whether you're a small business or you're a large employer, you can get started offering student loan resources at a nominal cost. And when you choose to contribute toward employee student loans, you simply pay for administration based on the actual participation in the program. So, if you have one participant or 10,000 participants, the administration of that part of the program scales with your organization. So, if I am as a CEO, as I think about getting the right people on board, keeping the right people on board, if those people are software engineers, if they're nurses, if they're digital marketers, if they're physician's assistants, if they're physical therapists or counselors, I need to address their interests in the workplace. And a lot of that is helping them get compensated in the way that they want. And student debt is meaningful. So, I can get student loan assistance up and running. It's one of the things that we pride ourselves on is the ease of use for employers. Our programs can be up and running in 15, we say an hour, but really in 15 minutes if the company is aggressive. And it changes their employment value proposition. It changes the way that they're now able to go to employees and job candidates and say, hey, we offer student loan assistance. We help you with what matters. Please join us and please stay.
Great. All right, let's shift gears a little bit. You've been doing the startup thing now for a while. I wanted to hear some of your startup, any startup tips, tricks, do's and don'ts, things that you've encountered that, lessons learned that you'd like to share.
Um, I think the biggest thing that I could guide founders on is patience. If they've worked with a technology product in the past, as a lot of CTOs and early stage engineers have, then they know about iteration, and they know that you put a product out. Shipping is better than being perfect, and you test and you learn and you make it better over time. For your non-technical founders, you might be in a CFO capacity, you might be in a sales capacity, you might be in an executive capacity. The startups, in whether they're technology based or not, I think are a lot like technology product management in that iteration is key. You'll find that you're doing something, whether it's this week, this month, this year, and then you're going to do it over again, and you're going to do it. You're going to learn from it and do it better. So, give yourself the grace to know that it doesn't have to be perfect, but give it your all, and then once you've done that, reflect on it, figure out what you can do better, and do it again and do it better. And I think iteration is really the key to building a successful organization, or figuring out if a channel, a product is not the right path. But it's very rare that you'll be able to figure that out in the first go, and often you keep doing it and doing it, and that's what helps you figure it out.
So true. Patience and an iteration, so important to understand, and it's not going to be perfect right away. So, all right. So I think what could be interesting for folks is like where you find inspiration. Maybe it's some of your mentors, or maybe some of your best mentors, or whatnot. What kind of inspires you, drives you to keep doing what you're doing?
I'll name names. One of the people who has been most inspirational to me throughout my entrepreneurial journey it has been Howard Tolman. Howard is a multi-time founder and investor in some highly successful startups. Howard is based in Chicago. We got to know one another when he was the CEO of the number one tech incubator in the country, 1871, where peanut butter got its start. Howard has, through his venture fund, become an investor in peanut butter, and he writes a weekly column in Inc. that talks about the perspiration principles, the concepts that he has come to develop and learn over his career that have helped him and his teams grow. And I'm an avid reader of what Howard writes, and it's in part because through my career, both as a tech entrepreneur and before, I grew up in a family bakery where you put in a lot of sweat working not only in a bakery but also in a family business. Howard's ideas and values have always resonated with me. So he's someone who I greatly respect and have found, whether we're talking or I'm reading the stuff that he writes, I've always found a lot of value in his mentorship. And then another person who I've been really fortunate to come to know and appreciate and learn from is Stephen Gallanis. Stephen and I got to know one another through 1871 as well. And Stephen, as he's built his company Cameo, just the way that he leads his team, the way that he communicates his product, their product, the openness of his communication, I don't want to, not necessarily self-deprecating humor, but just a real genuine approach to communicating with his stakeholders and his peers. It has been someone who I've learned a lot from.
That's great. Two great examples of folks that really are leading the way and sharing their knowledge and input. Really interesting. I love Cameo. It's really an interesting product as well. So um, great to see how that continues to interact. Wanted to ask you a couple more questions. Maybe, you mentioned 1871 a bunch of times as a hub and a
Yeah.
place that was a kind of like the heart of where you started, and you met great people and like Howard and others. Can you share like a little bit about how that's been impacted since we've been kind of in a weird world here in 2020 with the COVID situation?
Yeah, I just got an update yesterday from Betsy Ziegler, the CEO at 1871, and it's really impressive what she and her team are doing. The programming that they have put in place to support entrepreneurs and startups has continued to flourish in an online way. I don't know how many people sit in the space today. I don't sit in the space, but I know that it continues to be a thriving community, and I think that's based on the way that Howard and Tom Alexander and Betsy and her team now have built a collegial environment, one that makes great connections between founders and mentors and investors and customers, but also a learning environment. Betsy having joined 1871 from Kellogg, where she has a clear understanding of how people learn, and has developed programs to support entrepreneurs at different stages in different sectors and from different backgrounds. And I think the work that Betsy and her team are doing is phenomenal.
Yeah, it's really interesting to watch every hub kind of take their own approach to how to approach this situation. So that's great to hear. Hadn't heard that. So thanks for sharing that with us and our listeners here as we look to see what they're up to here soon. Okay, so we're nearing the end of here. I wanted to ask a couple final things. Do you have anything special plugs or anything you wanted to share? We always like to give you a little bit of opportunity to kind of spitball off what you've been up to and share anything new.
Oh, thanks for asking. Um, I think for us, we're just continuing to help all employers that want to engage college educated workers. The opportunity with student loan assistance. Actually, this is something new since 2016. When I founded the company in 2015, I thought, oh, this is going to be great for companies in tech, in healthcare, in financial services, where almost every job requires a college degree. And we found that both before the pandemic and since, some of our strongest industries are sectors that we didn't expect that we might be able to help. Sectors like construction, where it's really important to have the right project managers and civil engineers on board. So the uptick that we've seen in industries like that has been really interesting. And
Yeah, I can see that. One of the bigger programs that I went to Purdue, one of the bigger programs was BCM, Building Construction Management. So a lot of folks coming out of Purdue with that degree, and obviously are jumping in those kinds of gigs, and obviously have student loans.
great school.
Yep, boiler up.
So I would say that the biggest thing that I would communicate is just that any size company, any industry, if you need to attract, retain, or engage college educated workers, we can probably help.
Finally, want to ask you if listeners wanted to connect with you, what's the way to connect with you and your company to follow up after listening to this episode?
Yeah, just email me, david.aronson@getpeanutbutter.com. Let me know that you heard about us through Established, and if there's something that I can do to help you, that's great. We produce a lot of content about student loan assistance, so If you're interested in student loan assistance, please come to our website at getpeanutbutter.com. And I think this established community is a wonderful community. It's great that you're listening to the show today, and hopefully, actually not hopefully, I want to congratulate all those who will be participating in the competition this year, and wish everyone luck.
Thanks so much, David. Really appreciate it. And to all of our listeners out there, thank you for listening. Remember that if you're new to this program, please subscribe to our show. And if you're not new, if you're a longtime listener, we'd love to hear from you. Please submit a review, share some comments. It all helps. It all helps us better continue to evolve and create a better show, as well as help other folks find us in all the different places that we're positioning this podcast. So help us help you, if you will. So if you have a startup idea and you want to get it started today, remember, today is the best day to start, not tomorrow, not the next day. So get going, get it started, and let's do this. Until next time, I'm Frank Gruber signing off. Stay well and be safe out there, and look forward to seeing you soon.
Thanks for listening to the Startup of the Year podcast. Be sure to subscribe, and we'll be back with another episode soon.